are Advisorpedia at INSITE, and we're here with Matt Radgowski from Halo Investing. Thanks for being here. This is incredible stuff. So you guys are growing like mad. Why?
Yeah, no, I appreciate that, and definitely an exciting time to be there, right? And happy to be so. In terms of growth, I mean, I think there's a few key things going on in the market. I think you have a situation where investors, right, the focus of all that we do, really are demanding more, right? Personalization in terms of the advice that they receive, driving towards outcomes and goals, right? And that's a theme that's been around in the industry, right? I think there's finally a really strong realization that the product offering that we have with inside Halo, protective investments, in particular notes and annuities, can really deliver on that personalization, and outcome. I think you also have the advisor, right? Key actor in the play. They are really looking to differentiate themselves in the market. They're obviously looking to deliver on those goals, right, that the investors are seeking. And so, we are a set of products and structures that may not be quite as out there and complex as some of the other alternative investments that they use within their portfolios, but that again deliver a differentiated experience, one where they can really set and define the outcome and impart that outcome on the client's portfolio. And then finally, the third is just technology. And again, I hesitate, right? There's the fintech buzz that's out there, but just the simplicity, right, that the technology offers in terms of accessing the products that we offer and then managing them, right? A situation where the product access was extremely difficult before. Technology really has been brought to bear to simplify the process for the advisor and the investor that they serve.
Sure. I think one of the things a lot of people don't appreciate, unless you've been in big companies and tried to work with those complicated structures, is that they don't realize how fundamental some of the changes that you are adding. So, I sometimes like to think of you as the Intel inside, but it's actually more from a manufacturing perspective what you enable. So maybe an example of that?
Yeah, for sure. I think there's a couple things there, right? If you kind of look at the history of how notes in particular were accessed, you had investment banks that issued notes. You literally, if you wanted to access one of these notes, you're picking up the phone, right? And you're calling that issuing bank. And sometimes, quite frankly, you took the offer that was on the table from that bank, right? If you got a little more crafty, you literally picked up the phone and you called multiple banks, right? And you found the best offer, but again, you hoped that by the time you got that offer, it was still on the table by the time you called the others, right? And so really the technology focuses on two very fundamental things. One is making sure there's access to the notes that are made available off the shelf by those investment banks, so calendars. They're out there, they can be seen, they can be sorted on and evaluated. And then when it comes to customizing those notes, we created a structure where the advisor can design the note with that outcome in mind for their investor, and then it's auctioned out. It's put out to all the banks at once. They come back with their best and final offer, and again, the advisor can then choose that product that best suits the need of that investor. So it's all about simplicity of the process, providing both that infrastructure in terms of buying the note, but also the information they need to make a strong fiduciary decision.
Sure. So when I think about who benefits, benefits sounds like a lot of people.
Yeah. Well, and quite frankly, where it has to benefit to start is the end investor. Right? And so that's always the North Star. And so what do they get, right? They get a product that is aligned with the outcomes they desire, right? And there's an efficiency, right, just in terms of the delivery that allows for those investment banks to offer the solution, right, at a price that should be more advantageous to that end client. And so they certainly win. That's where it needs to start. The advisor, right, as they perform their duties of portfolio construction at a fiduciary capacity, they again can make sure that that product alignment fit is strong, but also that just the efficiency of doing it. Right? There's not more work created than the value that they're bringing to the portfolio. And certainly the issuing banks, they benefit from data and information. So they can build or design better products based on the feedback loop. Right? Our data and information can show them what's being purchased, right? Where's the attention in the marketplace, and they can bring better products as well. So really the entire value chain, starting again with the most important, which is the investor, all benefit.
Yeah, I think it's fantastic. So this is a success story. An awful lot of people ought to be making that telephone call. Matt Radgowski from Halo Investing. Thanks for being here.
I really appreciate it. Thanks so much.